When you allow more time for your money to compound, you just allow it to compound exponentially. So playing the long game, dollar cost averaging, and forgetting the needle and buying the haystack, principles of investing 1, 2, and 3. Welcome to Old Money, a show dedicated to helping you build the trust fund you wish you were born with. Ladies who lunch, listen up. Life is not about looking rich. I want you to build a life and a legacy that feels rich in every sense of the word. If you're ready to stack cash, talk shop, and trade insider secrets, you're in the right place. These are the new rules to old money, so let's get after it. Hello, rich girls and rich guys. Welcome back to Old Money, the podcast to help you build the trust fund you wish you were born with. I'm your host, Amber Frankusen. You guys, this episode, buckle up. Your girl's hot. I am ready to go. What a freaking week. I think this might be one of the most important episodes I've recorded because it ties in so perfectly to what is going on in the world today. If you turned away from the Olympics at any point in time to look at Wall Street Journal, Apple News, whatever, you would see red, you would see fear, you would see down, you would see crash. There is so much going on, and we need to talk about today what the rich don't want you to know about the stock market. We have so much to get into. I've been like jonesing to talk about this all day. I'm like actually hyped. I think my body temperature is up. My heart is racing. But before we get into all of that, I have some housekeeping for you. First and foremost, I have a big announcement about something happening in September that you can be a part of. I'm going to announce it at the end of the show. We'll talk about it in next week's episode, but it's all around finally curing your overspending. And if you need a little bit more money to spend with, second announcement is that we are running a giveaway right now on Instagram. So to enter the giveaway, what you need to do is leave a review on Apple Podcasts for the show. Send us a DM with a screenshot of that review. Just screenshot it before you submit it and DM it to us on Instagram at Old Money Podcast. That will be one entry. If you want a bonus entry, share anything about the show to your Instagram stories and tag us at Old Money Podcast. You can get up to 2 entries, and there will be 3 winners who will each get $150. On August 14th, I'll go live on Instagram to announce the winners and let you know who's getting that cash. And the last announcement, and I kind of feel like one of those people in high school that would read the morning announcements at school, or maybe like a camp counselor. But the last announcement is we have a listener survey that's available for you to fill out. Why would you fill out this listener survey, you ask? Well, because I want to reflect back to you what it is you want to learn. For example, one of the questions is, what are your financial goals? Check all that apply. And we've had dozens of people respond to this survey, which, by the way, thank you. I'm so appreciative. Of the people that responded so far, 90% of them said that one of their financial goals was investing. Second is 85% people checked they want to have better travel and experiences. So it is my job to create content that reflects back to you what you want, which is why last week we talked about going on vacation on a budget. And this week we're talking about investing. And oh my God, we have so much to discuss. So let's just get into it. There's not even time for birdie or bogey this week, but I'm going to break the fourth wall just a little bit. I am recording this on Wednesday, August 7th. So it's just about a week before this episode will drop. And as you know, the news cycle changes so quickly these days, but I don't think things are going to change much by the time this episode drops. If you listen to it on the day it drops on Tuesday, August 13th, or anytime after that, we are in for a wild ride. Now, just to take you back in time, we just hit the 1-year anniversary of the podcast. Thank you, everybody, for being here on this journey. I think we're doing important work. I've researched this podcast episode for 3 days nonstop. I think this might change lives. No cap, as the kids say. But we're playing the long game here. I'm playing the long game with you. And in reviewing what's popped off in the last year, the concept of financial fight or flight that I talked about on episode 3, which was released on August 1st of 2023, I was trying at that time to share with you all why I believe this is so important. And the concept, just as a refresher, of financial fight or flight is that money is emotional. And it's completely intellectually dishonest to say that it's not, and that money doesn't influence our emotions and our emotions don't influence money. And at the time, I really talked about how my emotions within myself were influencing my spending habits. So, for example, I was feeling at one point in my life very low self esteem and really striving for acceptance. And that caused me to overspend on outfits for every weekend. Instead of investing in staple pieces or a capsule wardrobe, I was always buying something from Forever 21 or Zara just for that weekend. I'd wear it once, never wear it again, and it would fall apart. Or I would overspend to buy drinks for all my friends. I was always the most generous and it wasn't in my budget. Or I would say yes to everything without considering a budget at all. And I was doing all of those things because my emotions about myself were unresolved. And it wasn't until I started doing the healing work and really starting to plug those leaks that I recognized how much my financial stability came through the stability that I had in myself. Conversely, if you are in debt, if you are stressed, if you can't pay your bills, that is going to influence your emotions. And we all know that feelings come through our body. We feel them not just in our heads, but in the chemicals that our brain dumps. For example, when humans are in a state of fear or stress, the rational brain, the problem solving brain switches off and the lizard brain switches on. And that lizard brain, what that means, it's like evolutionarily speaking, you feel like you are running from a wildebeest and you need to save yourself. So your energy is going to go into survival mode, which is what is the fastest and easiest way to just survive. And it doesn't necessarily take in all the information. You actually kind of have tunnel vision in your decision making because the part of your brain, your amygdala, that helps you make logical decisions gets hijacked by fear. So I started talking about financial fight or flight and these concepts of our emotions influence our money and our money influences our emotion. And the key to getting out of that cycle is to calm your financial nervous system and your body's nervous system as well, so that you can make better, more rational decisions about where you put your money, how you spend it, what your future goals are. And I have so many tips in that episode about how to cure overspending, more on that at the end of the show. But putting some basically like tripwires or booby traps in place in your life so that it's not as easy as clicking buy on TikTok shop and then new things show up at your door every single day. And at the end of the month, you're like, where did my money go? It's about being conscious about our money. It's about being conscious about our feelings about money and making sure we're being good stewards of our money by managing our emotions. Now, what does that have to do? I told you I've been playing the long game. We're here. It's our Super Bowl, my friends. The media is on overdrive everywhere. And the media is not just CNN, CNBC, Fox News. It's what your friends are posting on Instagram stories. It's the emotional reaction you have when you see somebody posting about or supporting the candidate that you don't support. It is this constant stream of chaos that's going on, and it's causing fear. Fear hijacks your amygdala. Fear hijacks your rational ability to make good decisions, and it's totally overwhelming. Now, I am not saying that things are not crazy. In fact, let's go through what's been going on in the last couple of weeks because we are in one of the most pivotal moments in financial history. And I see all of these headlines and I'm not sweating it at all. In fact, I'm incredibly excited and I'm going to get to that. But just to give you a recap so you can sound smart at your next meeting, here's what's going on. Japan, who's, in the world economy like the rest of us and has been dealing with recovery since COVID, inflation, all these types of things, their stock market, they have an index, which is like, the S&P or the Dow Jones index or whatever. They have one over in Japan because they have their own stock market over there. 4 weeks ago, it hit an all-time high. Okay. Everybody else in the world, like Europe, England, Canada, they're all cutting interest rates, meaning they're lowering the interest rates. You've heard this conversation. Interest rates are quote unquote high, even though historically they're not high at all. They are higher than they have been in the past many years. And basically, when you cut interest rates, you're making it easier for people to borrow money. You're making it less expensive for them to borrow money because the interest rate is lower. So people are more likely to go out and buy a car, buy a house to stimulate the economy. And it also is like inverse of inflation because they're trying to cut interest rates to mitigate inflation. Japan, I don't know what they were doing, but they raised interest rates. They raised interest rates where everybody else is cutting them. And then they had the largest 2-day drop in their stock market's history, larger than the Black Monday crash of 1987. And it spooked the rest of the market, especially in the US. So over the weekend of like the 3rd and 4th of August, you're seeing all of these like, holy shit, recession indicators in the news. People start talking about liquidating their investments. People start talking about shorting the stock market. And basically, it just put the fear of God in everyone. In addition to that, in the US, a lot of big companies were releasing their earnings reports. So earnings reports are what they do quarterly to send out to the stockholders to report on revenue, profit, their industry trends, all the things, right? And many big companies came out and they missed on their projected revenue in their earnings report. And I'm talking about companies like Apple, Amazon, things like that. So that's another indicator. People are like, oh, shoot, why are people not spending more on Amazon? Why are people not spending more at Apple? Well, because the report is the economy is soft. And what that means is that people in the economy are not spending as much money as they were. Why is that? Well, things are very expensive right now. And I'm not just talking about things that Apple sells or things that Amazon sells are expensive. I'm talking about the cost of electricity is insane right now. Cost of energy is higher than ever in many parts of the country. Cost of, food and travel, all these things are really out of control. So when we say the economy's soft and we see stats like this one, where back to school shopping spending is down like 7 or 8% this year, people are not spending as much money. So the kids are not getting all of the new shoes, all of the new backpacks, all the new school supplies. And I don't think there's anything that brought me more joy as a kid than going to Office Depot or Office Max and getting brand new highlighters every year. Like for me, I am such an Enneagram 3 type A, like that is pure joy. So really sad for the kiddos out there. In addition to all of that, new unemployment numbers came out. It was reported that the new unemployment number in the United States is 4.3%, which is a 0.5% jump from what it was before. According to, all these financial pundits, 0.5, a 0.5% increase in unemployment indicates a recession. Sidebar on this, the White House has been reporting all of these economic stats, and this is not a commentary on my position on either political party. It's just a reminder for my old money guys and old money gals to be cautious about where you're getting your stats from, because the White House likes to put out all of these stats that are actually egregious. For example, they like to point fingers. Both sides do this, okay? So Biden's saying, look at all of the jobs that we created after Trump was out of office. We made the most jobs ever. What they failed to mention is that the reason that people were out of jobs were because the federal government said you cannot go to work because of COVID, or people were scared to go to work because of COVID, or people couldn't go to work because of underlying health issues. So they're taking a lot of credit for things naturally correcting. In the same vein, the White House has been reporting employment statistics that they're really, really great. Like, look at all these new jobs that were created. But they used to just report the new full-time jobs that were created. Well, recently, they just started saying these are all of the jobs that are created, inclusive of part-time jobs. However, you and I both know that a part-time job, or just one of them anyway, is not enough to survive in this world today and have a household. So just a side note to be careful where you get your stats from. All of this sounds like really bad news, right? Well, there's more, but I'm still not worried. So hang tight with me. Don't get freaked out. This is not the sky is falling Chicken Little, but it might feel like that if you're spending any time on social media where people are saying it's about to be World War III. What's happening in the Middle East is that there were some Hamas leaders killed, which is great news. United States Marines were sent to the Middle East, which is not great news. The government of Iran is PMSing and threatening to blow things up. They're getting all angry about stuff. That's going to affect oil prices. So again, the market reacts and says, this is not good. Then randomly, I'm getting to the end of the bad stuff, I promise. Then we get a news article that let us know that Warren Buffett sold half of his Apple stock. Warren Buffett is the chairman of Berkshire Hathaway. He's one of the most prolific investors of all time. He's in his 90s. He was BFFs with Charlie Munger. They had the little necklace that was the heart, breaks into two. Charlie wore the B. Warren wears the FF, and they're just two little cuties who are just piling up money like crazy. And then we hear that Warren Buffett sold half his Apple stock, and we're like, what the heck? Because he was one of the biggest individual holders of Apple stock. Crazy story about Apple and Warren Buffett. He had 789 million shares of Apple that were worth approximately $166 billion, which makes up about half of his stock portfolio and is his biggest holding in any one company. But the crazy thing is that he didn't start buying Apple until 2016. And since then, he has bought shares 13 more times and has gained 429% on his money since he started buying Apple. So I hear a lot of people out there say, it's too late for me to get into Amazon or Apple or the S&P 500 or whatever it might be. Just remember that Warren Buffett didn't start investing in Apple until 2016. So if he can do it, so can you. My point is that he sold about half of his shares in Apple. Reports are coming out that Mark Zuckerberg has been selling some of his portfolio, Jeff Bezos has, and typically, I've talked about this before, that doesn't mean something bad is happening, and we'll get to why in a second, but often these CEOs have to plan their divestments or their sales many months in advance. And so these are already going to be pre-scheduled sales on a schedule, and they tend to happen at the same time. People freak out, but it's not like that. This time, I actually don't know. But here's the thing. Why are they all selling? Because they need and want to have cash. It's reported that Warren Buffett's sitting on like $275 billion of cash. Why would he need cash? To go buy more stocks. When is the best time to buy a pair of Louboutins? When they're on sale, because you know they're going to hurt your feet anyway, and you're not going to get a lot of wear out of them. So you shouldn't be spending the $795 regular price. You should be getting them for half off. When's the best time to buy a winter coat? In the middle of summer when nobody's buying them. So they're on sale and you can get a great deal. Same thing is happening right now. People are getting ready for all of the things that are happening so that they can go buy more stocks. Here's the thing about the fear, especially the fear from the media, the fear from our friends, the fear of if the candidate that you don't support gets into office. Fear makes you act irrationally. And also when it's pervasive, it becomes a self-fulfilling prophecy. I heard this example from Dee on the podcast group chat, Dee Murphy. I'm a huge fan of that show. And he simplified it so well. When you see the news and it's like stock market's down, you look at your portfolio, it's down 10%. You're like, shoot, we were supposed to go to Palm Springs this weekend, but since everything's looking down, maybe we should cancel that weekend trip. Got to stay home and save money because you don't know what's going to happen. It's a prudent move, sure, but what happens is then you don't go spend your money at the Parker Hotel. You don't go spend your money at the Nest. You don't go to the shops on El Camino. Is that what it's called? El Camino, El Grande? I don't remember, but you know what I'm talking about, where they have that like one rogue Gucci store in Palm Desert. You stay home, you don't spend money, and then they report the economy is soft because people are not out there selling money. So people also hear, oh my God, all these big guys are selling. The stock market's going down. I should mitigate my losses. Should I sell too? They panic. They take action based on fear and emotion. They're going to their fund managers, they're calling and they're saying, my portfolio is down 10%. What are we going to do? And it's not often that the fund manager is going to be like, well, just write it out. They're going to have to do something. They have to take action to feel like they're earning their paycheck. Now, here's the thing. If you're listening to this and you're in our core audience, meaning you're not within 5 or 10 years of your retirement date, this is your time to shine, my friend, because what the older wealthy people are doing, because they need to preserve their portfolio, is very different than what we have the opportunity to do. Is the world ending? Are we crashing? No. What's the difference between a crash and a correction? Well, I say it's context. The difference between a crash and a correction is context. If the stock market has a huge fall from its all-time high, does that mean that it is failing? Does that mean that it's going into the garbage? Does it mean the US economy is over? Not at all. Stock market, especially the S&P 500, has been ripping for the last couple of months. And yeah, it went down. And per the financial education piece, a correction is when there's a drop of 10%, but less than 20%. And a crash is when there is a decline of 20% or more. So I just told you, there was a huge Black Monday type of a thing that happened in Japan, but it was from all-time highs. That's what I'm talking about with context. There's more to the story, and we can see the reason why people are reacting this way. And if we have the context, we can look at the news articles and understand why they all look red, why they're all really scary, but not let it affect us. I want to talk about something called the Fear and Greed Index. This is something that you can find on CNN.com. And it comes from the famous Warren B quote where he says, "Be fearful when others are greedy and be greedy when others are fearful." The Fear and Greed Index, as I see it today, live on my screen on Wednesday, August 7th of 2024, we are in extreme fear. So this little index goes from on the far left, extreme fear, then fear, the ratings between 25 and 50, at 50 are neutral. Then we go into greed and extreme greed. And what it's indicating is what the market is doing, what emotion is driving the market right now. A week ago, we were neutral. A month ago, we were neutral. A year ago, we were in greed. Today, we are in extreme fear. This is fascinating stuff. In the extreme fear, it is because the market momentum stopped. And what they're looking at is the S&P 500 and its moving average of the prior 125 trading days. When it's above its moving or rolling average, it's positive momentum. But if it's below, it shows that we are getting skittish and we're seeing that the momentum has slowed. And then the other index on here that's been the thing that's on all the headlines is this market volatility graph. It's one of the most well-known measures of the market sentiment, and it measures the expected price fluctuations or volatility in the S&P 500 index options over the next 30 days. And it is very high right now. It's lower in bull markets. That's when things are very good. And it's higher when it's a bear market. The Fear and Greed Index uses increasing market volatility. So things are going to get crazy, drop, go up, not be predictable as a signal for fear. I know I have read your responses in the listener survey that I talk too much about Bravo. I don't know what to tell you guys. I'm obsessed with reality television. I wanted to be a sociology major when I was in college because I love observing and watching the dynamics of these groups of women and how they all play into each other. I'm rewatching season 9 of Real Housewives of New York right now. It's absolutely fascinating to watch back what was going on with Bethany and Jason Hoppy, but that's a story for another day. What I want to talk about, and this is, bear with me if you're not a Bravo fan, this is one Bravo thing for my Bravo people. If you watched the finale of The Real Housewives of New Jersey and you saw the Jackie and Teresa drama, by the way, I am scared for Jackie Goldschneider and her well-being and her life because she has been so embarrassed and she is a person that feels shame. We know this. She has a history of disordered eating and she just got read to filth on that last episode. But what you saw with Jackie is exactly this: market volatility. Jackie was greedy. When she was hurt, she went and tried to get information on Teresa. She acted irrationally. She was greedy. And then she started to be fearful. So she started to lie about it. She started to lose her position or her perceived position in the group because she got demoted from a full-time cast member to a friend of. She wanted to get back in Teresa's good graces because she saw her as the OG of the New Jersey franchise and she started getting fearful and lying because she didn't want Teresa to find out I won't even get into the drama. She didn't want her to find out that she was talking to Louis' ex, and Margaret totally blew her cover and exposed her. This is the perfect example of that Warren Buffett quote, be fearful when others are greedy. When Jackie was greedy, she was one to be feared because she was going to go out and do whatever it took to protect herself and protect her ego. I believe it's one of the most fascinating sociological constructs. I mean, all of New Jersey, like Caroline Manzo of it all, the Danielle Staub, the mob tie-in, Dina Manzo. Please DM me if you want to talk about Bravo Housewives. I'm not supposed to talk about it on the show anymore, but we need to talk about it. It's crazy. But back to money, okay? Back to reality, what's going on, not reality TV, but actual reality. What will happen? What is happening? What has to happen is that the stock market will probably fluctuate quite a bit and it will probably go down and it'll probably go back up. This is not financial advice. But when we look at things contextually, we know that we are in an election year and the party that's in power right now, the Democrats, they're likely not going to want to go into the election in November with high unemployment rate and a flat market. They are going to want to come in and say, look at all the stuff that we've did that's so good. Look at how we saved the economy, like they've been telling us for the last 4 years with these maybe not so accurate statistics. But the thing is like, how much lower will it go? What do I do? What do I do as a young person? Here's the thing. No one can time the market. I do not know when the market's going to hit the low. I do not know when the Max Mara Teddy coat is going to go on a sale where I can actually afford to buy one, even if it's in the dead of summer. I cannot predict when these things will happen. There's too much to pay attention to. And it actually doesn't even matter. That's correct. You heard me right here. It does not matter when the lowest will go and when you should start to buy if you're going to follow the patterns of Warren Buffett, Mark Zuckerberg, Jeff Bezos, and some of the brightest investing minds in the world. You have to shift to becoming unshakable. The term unshakable, we need to get into it. This is what this episode is all about. And we just spent 30 minutes talking about all the doom and gloom. And yet I'm telling you, I'm not worried at all. And you're like, what crazy pills are you taking, Amber? The crazy pill that I am taking is that I am rereading for the second time the book that changed my life about money, which is Unshakeable. I am a big Tony Robbins girly. I'm a big personal development girly. I started with going to personal development conferences like Lori Harder's Bliss Project, which I think I went to in 2016 and 2018, met amazing women there and started to get exposed to these very basic personal development tropes. I took a class about personal development in college. I loved it. We talked about our Enneagrams and our Myers-Briggs, and we talked about how to be a good leader. Just some real soft skills stuff. And as you start to get into the personal development space and you read books by Ed Milet or Emily Ford or Lori Harder, Tony Robbins, you see there's similar themes. This is not rocket science. All of this stuff is being retaught, repackaged in different flavors, but it's all basically the same stuff. Tony Robbins was inspired by his mentor, Jim Rohn. And Jim Rohn was probably taught by some other person who's taught by some other person. This is stuff that's like passed down from generation to generation, right? So you know me, I love Tony Robbins. I went to go see him in 2018 or 2019. I can't remember. It was in Dallas. I got to stay with my beautiful friend, Emily Austin in Dallas. And I walked on coals, y'all. I went to a 3-day Tony Robbins conference, Unleash the Power Within, and I loved it. I went because I knew I wanted to see Tony Robbins live in person before he passed, because I believe he's one of the greatest speakers, communicators, kind of like pop psychologists. And he has built an incredible business. He does so much to give back to the community through Feeding America. There's a lot to admire about this guy, and there's a lot that triggers people about him too. However, when he first released this book, Unshakeable, in 2017, I heard a podcast episode that he did on Lewis Howes's show, and it changed my life because it taught me some of the core financial principles that felt a little bit too complicated for me to get, but he broke it down in very easy to learn terms, and that's what I want to do here for you. The book Unshakeable is all about staying calm in the face of volatility. It's what I've been talking about financial fight or flight. Can you calm your financial fight or flight? There are so many people out there that are prolific investors, like John Bogle. He is the founder of Vanguard. He has, and we've talked about him before on the investing episode, he has these principles of investing, and some of them I'm going to highlight for you here. But essentially, the book Unshakeable is teaching you that you don't have to predict the future to win. You don't have to know when the market's going to be at its lowest. You don't have to know when to invest, because we have statistics to show that it's not about when you get in the market, it's the time you spend in the market, due to things like compounding interest, which is the magic of personal finance. And you don't have to worry about things you can't control. The whole book is telling you not to worry about things you can't control. You cannot control who is the president. You cannot control it. You can contribute to the outcome by voting, but you cannot control it. There are much bigger players and much larger things at play that will control the outcome of this year's election. You cannot control if Japan raises or lowers its interest rates. Unless you have somebody in Japan's Federal Reserve on speed dial, there's nothing you or I can do to control what happens in the stock market in Japan, in the UK, in Europe, in the United States. We cannot control it. We cannot control the price of gas. No matter how much you fight that you don't want to pay $5 a gallon, you cannot control the price of gas. You can go buy an electric vehicle, and then you can complain about the cost of energy, because there's huge issues at hand. I know I have a lot of listeners in Southern California, San Diego specifically, where I'm from, SDG&E, or if you're from my hometowns in Northern California, you know about the chaos with PG&E. Energy prices are out of control. Can you control them? No. What can you control? How much you drive? How often you turn on the air conditioning? These are things you can control. Now, will it be inconvenient or will it be uncomfortable to not run your air conditioning or not drive when you want to drive? Yes, it will. What can you control? Your reaction to that emotionally, or you can control your income. You can create more value in your life to earn more income. You can work more hours, start a new job, do a side hustle, whatever it is that you want to do to create more income so that you don't feel the impact as much of the cost of these things. You do not have to worry about things you can't control. All you have to focus on is what you can. What you can control is where your money goes. So in addition to creating additional revenue, which I have a really good episode because that's something else that you guys really want to talk about, is starting businesses, creating new revenue. What you can control is where your money goes. You are never going to earn your way to financial freedom. You can become very wealthy working for a company and earning a paycheck, filing a W-2 every year, but you will never make your way to financial freedom unless you set aside a portion of your money and invest it so that it compounds over many, many years. It's how you make money when you sleep. You want to stop trading your time for money and instead set things up automatically so that your money is always growing and working for you. Here's what else they talk about in the book Unshakeable: that when the market is volatile and the fear and greed index is very fearful, shaking in my boots, hiding under my bed, putting the covers over my face, market turmoil isn't something to fear. It's actually the biggest opportunity for you to really grow your wealth. There's this great quote by, I think it's Teddy Roosevelt, and Brene Brown has usurped it and packaged it for middle-aged women in America. And I respect her for that. Like, thank you. We needed this and I needed this conversation. But anyway, the quote is something about, if you're going to be criticizing what I'm doing, you better be in the arena with me. Basically, it's talking about like the Coliseum, right? Like, if you want to criticize how I'm fighting as a gladiator, then come down here into the arena and fight with me. And if you're not in the arena, then basically shove it with your opinions. And that's what I feel about the stock market. That's what I feel about investing. If you want to complain about everybody else getting rich and you're feeling envious about people that are succeeding on social media, and you want a sustainable way to grow your wealth, you need to play the game. You cannot win an Olympic gold medal if you never go to the trials, if you sit on the bench, if you don't show up for the race. By the way, did we ever find out what happened with that sprinter from Jamaica? I think her name was like Shelly Price something. She had like 2 hyphens in her name, but I loved her. She had such a beautiful smile, and then she didn't show up for the final race. I need to research that. But how is she going to win an Olympic gold medal if she doesn't show up for the race? She can't. She's out of contention. The same thing is for you when it comes to your finances. Fear is not rewarded. Action is. So when we look at all of the things that are going on and you want to calm your financial fight or flight, you want to calm yourself from being freaked the fuck out by all of these headlines and news articles and panic selling and thinking that things are going to go wrong, what can you do instead? Should you cancel your weekend trip to Palm Springs? If you have budgeted for it and you're taking care of your investments and your 401k and your savings, I say go enjoy that weekend trip to Palm Springs, baby, and you'll probably get your room at the Parker on a discount. The thing is that being unshakable means continuing to take action strategically and consistently, no matter what the market's doing, because you're taking a passive approach. When we talk about being unshakable, I want you to think about the types of relationships in Hollywood, as an example, that are just solid, unshakable. When we look at George Clooney and Amal Clooney, they look solid and unshakable. Ava Mendes, Ryan Gosling, beautiful, respect. They're very private. Another couple actually that just comes to mind for me now because they're in the news so much with Blake Lively and her Colleen Hoover movie, which I have not read that book. Everybody told me to, but I could not get into it. Anyway, Blake Lively and Ryan Reynolds, that's a type of like unshakable relationship to me. Oprah and Gail, Oprah and Stedman, whatever. Martha Stewart and Snoop Dogg, or, these people that you just look, Ashton Kutcher and Mila Kunis, regardless of what you think of them, they just seem solid, right? They seem good to go. When you look at relationships that started in chaos and turmoil, like Brad and Angelina Jolie, that started in so much chaos with two, at the time, and maybe one of them still, pretty volatile people. It's one of those things like how you do one thing is how you do anything. I did not ever think that they were OTP. They were going to crash and burn, and look at they did. What about JLo and Ben Affleck? All the chaos there. I mean, JLo's, I haven't watched her documentary, but the quote that came out of it from Ben Affleck was Ben Affleck's a recovering alcoholic. And he alluded to the fact that JLo is as addicted to fame as he was to alcohol. And then they come back and they have this huge whirlwind romance where they're drunk on love. And then there's these reports coming out that they're not talking, they're selling off their houses, that Ben Affleck feels like he was out of control in the honeymoon phase and was completely swept off his feet. And now he's like, oh, fuck, what did I do? That's volatility. What type of relationship do you want to have with your money? One that's strong and steady and consistent and respectful, or one that is reactive, emotional, all over the place, and tabloid fodder? There's nothing to write home about when you do the same shit every single week. There's nothing to write home about when you go to the gym every single day for 5 years in a row and you create a stronger body. But there is something to say when Heidi Montag goes under the knife and has like 60 procedures in a day to completely change her appearance. Do you see what I'm getting at? Volatility is not the best, but as human beings, we often like it. Who wants to start a business and grind away at it for 25 years? Wouldn't you rather win the lottery? Everybody's looking for that quick fix. Everybody's looking for that jump in their own portfolio. But I'm here to tell you that the world's best investors, Warren Buffett, Ray Dalio, Carl Icahn, John Bogle, like I told you about from Vanguard, they all have very ideal temperaments, which allows them to remain calm and rational when markets are imploding and most people are losing their minds. That is a direct quote from the book Unshakeable. One of the reasons why they win is because they base their decisions on a deep understanding of possibilities in the market, not on emotion or desire or luck. And that is what being unshakable is all about. So, some of the principles of investing, generally speaking, that would allow you to be unshakable. And the reason why I feel unshakable in this moment are the following. Number one, dollar cost averaging. We have talked about this before, but essentially what dollar cost averaging is when you invest the same amount of money on a regular schedule consistently over time. Because the principle of the stock market is that there's always a reversion to the mean. This is not like your boring ass algebra class. What that means is that everything basically averages out at the end. Let's go back to like a body and health analogy. if you ate 5,000 calories on Monday, 0 calories on Tuesday, 5,000 calories on Wednesday, and 0 calories on Thursday, that means that over the 4 days, you ate an average of 2,500 calories per day. You might think that you're doing really good because you're not eating any calories on Tuesdays and Thursdays. But if your daily calorie intake should be 1,500 calories, you're overeating by 1,000 calories a day. It always comes back to the average of the calories that you eat over time, and that's what's going to influence your weight fluctuations. It's the same thing with dollar cost averaging. Let's just talk about one stock, for example. Pick your favorite company. It's just an example, whether it's Starbucks or Chick-fil-A or 3M or something complicated like NVIDIA. Okay, I don't know. Over time, let's say that you commit to buying that stock on the first of the month, every single month, forever. That stock might fluctuate up and down, up and down, up and down, up and down. But if you buy it on the same time with the same amount every single month, you're eventually going to purchase the average of the stock price over time. That's what dollar cost averaging means. And what that allows you to do when you're consistent is it allows you to generally not worry about the price, because if that stock is trending upwards over time, you're going to just always buy at the average stock price. Now, we're talking about NVIDIA, we're talking about Chick-fil-A, Starbucks, et cetera. How do we know that those companies are going to always go up? Well, we don't generally. We talked about this on our first investing episode, but the top stocks in the S&P 500 10 years ago are not even in the S&P 500 anymore, except for Microsoft. There were things like General Electric and IBM that used to lead the S&P 500 as it relates to the size of their businesses, and they're nowhere in the top anymore because things change. And now we have stuff like Amazon or Apple or Facebook that are ruling the roost, right? Like the economy changes, society changes, our habits change, and things fall in and out of favor. So how do you figure out where to put your money? If you want to be dollar cost averaging and buying things on a regular schedule, but you want to make sure that that stock is going up all the time, where do you put your money? Well, this is not investment advice, but according to the experts, all the people that I mentioned before, they would like you to look at something called index funds. I go into a lot more detail about index funds on the investment episode, which I'll put in the show notes for you. But the whole point of index funds is that they track and index a group of stocks. You're not just buying one stock. You're not just buying Chick-fil-A. You're not just buying Starbucks. You're not just buying Chipotle. And you're not going to be affected if there's an E. coli outbreak or people suddenly stop wanting chips and guac. You're essentially hedging your bets. And in one purchase, you're going to purchase 500 stocks instead. As John Bogle puts it, again, he's the founder of Vanguard. He says, forget the needle, buy the haystack. Don't waste your time buying individual stocks or stock funds. Cut your risk by purchasing broad-based index or exchange-traded funds. That would mean that you would buy a share of the S&P 500, which has 500 companies in it, all of the top 500 companies in America. And the nice thing about the S&P 500 is that it's its own index. So as companies fall out of favor or they stop producing or they crap out and they close down, they kick them out of the S&P 500 and put a new company in. And the thing about investing in index funds is it just allows you to look at historical data to make relatively general predictions about the future. The S&P 500 has always gone up. If you believe in the US economy in general, in a whole, it will probably continue to do that unless you think America is going to fall apart. So we're recapping some of the principles of investing, just some, not all, that will allow you to be unshakable and not be affected by news and headlines and chaos, but instead stay the course and continue to build your wealth without being stressed. This is all about calming your financial fight or flight. So you've got dollar cost averaging. We're talking about forgetting the needle by the haystack, looking at index funds. Number 3, you got to play the long game. Now, I am very, very aware of the privilege that I had to have somebody in my life that was teaching me about the stock market and giving me some early financial information. But it honestly, I don't know if it's just because I was too dense, because I was too young, or it wasn't clear enough. But if I could go back in time, I would, as a 21-year-old person, and this is not financial advice, but what I wish I would have done was put $100 a month into an S&P 500 index fund. I was taught that I had to figure out what stocks to pick. I had to pick companies. I didn't even know what an index fund was. And the stress of having to figure out what to pick paralyzed me. So what did I do? I picked nothing at all. I did nothing. It's the overwhelm of choices. It's when you go to the grocery store and there's 15,000 dish soaps on the shelf. Am I supposed to buy Mrs. Meyer's or Method or Dawn or Cascade? What do I get? This one smells like apples. This one is blue. This one has a duck. What am I buying? Well, it's not hypoallergenic or it's not eco-friendly. And there's so many decisions that go into it, which is why people tend to buy the same products over and over and over again, because they don't want to make a new choice, because making choices and taking in all that information is overwhelming. It's overwhelming. Fortunately, with soap, it's a pretty low stakes commitment to buy, right? If you don't like the smell of the soap, you throw it away and you get another one. But the thing is that's why companies like Procter & Gamble win over time, because they've had families buying Dawn soap, and then you grow up with Dawn soap. So when you become of age and you get your first apartment, when you're in college, you need dish soap. You bought what your mother bought. And it's this like generational thing. And now, super interesting, a couple of years ago, I learned about mini brands. And if you have young kids, you probably know about these, but these are toys that you can buy at Target. They come like, remember those orange chocolate things where it was like an orange flavored chocolate, but it's shaped like an orange and you like hit it on the table and it breaks into the orange slices? Well, it's that, but in plastic. And then inside the little plastic pieces of these orange slices, you get mini brands, and they're miniature Dawn soaps. They're miniature cream of wheat. They're miniature, I don't know what, like Windexes. And kids collect these. And when I first saw this at a family Christmas event in 2019, it was right when TikTok was starting to blow up, right before COVID. So these kids taught me about TikTok. I made my first TikTok with one of the trending sounds. I saw mini brands. I was like, this is where the economy is going. Now, Procter & Gamble company, Procter & Gamble products are in kids' toys because they're training kids what to be familiar with and what to buy when they're of age. Crazy shit. What am I talking about? We're talking about playing the long game. I digress. Okay. If you play the long game, you get the benefit of the most important thing in investing, which is compounding interest. What compounding interest means is that if you put $100 in and you make 10% on it, you're going to have 10 more dollars at the end of the period, the month, the quarter, the year, whatever. So you started with $100, then you have $110 after you've earned interest. Then you're going to earn interest again. But you're not just earning interest on the $100 you put in, you're also earning interest on the $10 you earned. So you had $100, then you added 10 to it. Now you're going to get 10% again. You're going to have $11 because you have the $10 that you made on the first 100 you put in, and you have $1 from the $10 you made. So now you have $121 in your account. And it's that magic, the fact that you are earning on the things that you earn, that allows you to exponentially grow your wealth. When you are playing with small dollars, it doesn't seem like a lot, and it can be very frustrating to hear people talk about a compound interest because you're like, fuck off. Okay, I made 35 cents this month and I'm going to make 65 cents next month. I used to be that way, and that's why I wasn't motivated by it. But there is an amazing thing that happens when you get to this tipping point where you start making so much money in interest that you can just live off of the interest. You can live off of the returns that your money is making for you just by putting it in the arena, by putting it in the game, by investing it in the stock market or in equities, in whatever it is. You can just have income that is from interest because the money is always growing. Now, of course, when things happen like a correction or a crash, you better have some money in reserve so you can continue to live the lifestyle to which you've become accustomed. But the whole point here is that when you allow more time for your money to compound, you just allow it to compound exponentially. So playing the long game, dollar cost averaging, and forgetting the needle and buying the haystack, principles of investing 1, 2, and 3. The other thing, it's time in the market, not timing the market. This is different than playing the long game because the time in the market means you just have to be in. Get this for a stat. 78% of the stock market's best days occur during a bear market, which we're going into right now, or during the first 2 months of a bull market. But if you missed the market's 10 best days over the past 30 years, your returns would be cut in half. If you missed the best 30 days in the last 30 years, it would reduce your overall returns by 83%. How do you not miss out on the best days? You have money in the game. That is what we mean by it's time in the market, not timing the market, because you can never predict when things are going to pop off. Remember what we learned in Unshakeable. You do not have to predict the future to win, and you do not have to worry about what you can't control. All you can focus on and all you have to worry about is what you can control. So you can control dollar cost averaging. You can control what types of equities you buy. You can control how early you start investing, and you can control whether your money is in or out of the market. The other thing, number 5, is not thinking that you're smarter than the market. Not thinking that you're smarter than the market means not trying to be a day trader. The next episode that we talk about is all about day trading, Robinhood. We had a great conversation in the Old Money Country Club during our July live money date where we talked about different investment apps. And I have a very hot story for you about a potential advertiser that approached me to advertise on the show and why I turned them down. And it spiraled into this conversation about investing apps and are they good? What's happening there? And we're going to talk all about it. I think we're going to need to just do one whole episode on Robinhood so we can talk about that before you get into the apps. However, not thinking you can outsmart the market means playing the long game and not trying to be a day trader. That is the other lesson that I somehow absorbed about money when I was in my teens and 20s is that my expectation in order to be successful in the market was that I had to be a day trader. I didn't know you could set it and forget it. I didn't know I could buy one thing over and over and over again and my money would grow. I thought that I was going to have to be reading the news, watching, and if I wasn't paying attention, that I was irresponsible and I would never know what to buy and what to sell. Many people who are day traders are actually not successful. There was a study at the University of Berkeley that said that the majority of trades, up to 80%, are unprofitable. Not just because people lose money on their predictions, but because they're not paying attention to things like transaction fees and taxes. We're going to talk a lot more about that. But the last thing I want to say in a principle of investing is that you have to pay attention to fees. Now, we talked a little bit about this in the episode all about financial advisors, but we'll talk more about this for sure, 100%. But let's put a bow on all of this and talk about calming your financial fight or flight for real by being unshakable and looking at what the wealthy are doing. The wealthy are excited. They're looking for opportunities. They're buying. They're ready to go. They're getting liquid. They're getting some money set aside in cash so that they can buy at a discount. And I'm sure that all of these huge family offices have huge, very complicated financial strategies in place. Yours doesn't have to be complicated. So while we're going to talk so much more about investing, we're going to talk about the apps, we're going to talk about day trading, we're going to talk about all the things. I think this is a big mindset piece that we have to have, especially in light of all of the news going on with politics and the economy and impending World War III and thinking that I need to be a homesteader and grow lettuce to survive and have water, make rainwater drinkable. I don't know. It just feels like a lot. And in this day and age, we're taking in more information than ever before in 30 seconds, 10 seconds, flip, flip, flip on your TikTok. There's a lot going on out there. So I'm not saying it's easy to control your financial fight or flight, but I'm telling you that you can. So here's where I want to put a bow on it today with some journal questions. This is something that I want to start incorporating for us all at the end of these episodes to reflect. So here are some questions for you to ponder on, just 3 today. What things stimulate my emotional dysregulation with money or just in general? For me, these things are drinking alcohol, not sleeping well, feeling FOMO, looking too much outside of myself and at other people, or abandoning my self-care. I mean, that's a big one for me. If I'm not journaling, if I'm not working on the podcast, if I allow myself to go into the spin cycle, if there's news on in my house, I'm stressed and that stimulates my emotional dysregulation. The second question is, how can I better regulate my emotions to be a better steward of my money. And for me, that goes back to turning off the news or not going into the news if I'm in a bad place emotionally. It means going to therapy. It means taking my supplements, drinking enough water, making sure I'm well rested, showing up positively, journaling every day, scripting out how I want my day to go and how I want to feel. All of those things help me better regulate my emotions, which in turn helps me to be a better steward of my money. And the last one is, what does it mean for me to be unshakable? And for me, that means at work, in my relationship, just managing my emotions in traffic. I mean, how can I be unshakable all the time? Not just with my money. And for me, that means being in integrity, always trying my best, for example, with work, making sure that my team members are supported, my team is doing well, they have the resources that they need. So we always take care of our clients and knowing that my marketing machine is working so it'll attract more clients to us to find us when they need us, and trusting and knowing that we can always make more money or I can go sell and we can continue to grow. In my relationship, it means that we have foundational rules of how to handle an argument or what to do when one of us is overextended or dysregulated. It means taking care of my own emotions through breath work, hypnosis, journaling, all of those things. So the concept of being unshakable is not just about having fuck you money. It's about putting smart financial principles, smart investing principles in place and practice in your life and setting up those systems, just like we set up our systems to automatically save, we automatically invest, the same way that the wealthy are doing it too. So the people that are out there that are the smartest in the world in investing, they're doing, big things and making moves. This is their full-time job. It's all they think about. They're the smartest, most genius people in the world. And while we can learn a lot of investing tactics from them, I think the thing that they say, or that Tony says in Unshakeable, that we can learn most from these guys, from Warren, Ray, Carl, and Paul, is that they have calm temperaments, which allows them to stay rational even when things go up and things go down and everybody else is losing their minds. They focus on what they can control, not what they can't control. And that's what it means to be unshakable. So I told you at the top of the episode that I have an announcement for you. If you are interested in joining me for a challenge this September, we're going to do something that we've never done before. September, for me, it's going to be no spendy September, and we are going to be working on calming that financial fight or flight as it relates to our spending. This is something that I have told you I have healed over time, which is impulse shopping, overspending, not following a budget. And I've got the path for you all. So we're going to do a 3-day challenge, 3-day free workshop. This is the only time this workshop will be given for free, and it will be given live, where we are finally breaking the habit of overspending. And you're invited to join me. So just know that that's coming up. I'll have a sign up page for you soon. There's going to be support all through the month of September, especially in the Old Money Country Club, to help you finally break that habit for real of overspending. It's going to be fun. I hope that you're here for it. Coming up on the pod, we're going to talk more about day trading. We're going to talk all about Robinhood. We're going to dive into the apps. And as always, I'm here to answer any questions you have. Email me at oldmoneypodcast@gmail.com. Send me a DM at Old Money Podcast. Make sure you go and leave a review. Send me a DM with your review screenshotted so we can give you $150. And listen, baby, I'm on the mission to make us all rich. So if you have not yet done so, please subscribe to the podcast. I see a lot of you listening, but not subscribing. Yes, I have stats to show it. I love that you're here, but please push subscribe so that you're downloading every episode every single week. And if you haven't yet shared this with a friend that you want to travel to Saint-Tropez with yet, you're going to need friends to go on that yacht so you can split that tip 5 ways. So it's not just you getting rich. Spread the love so your friends can get rich too. Send this to a friend, tag this on your Instagram profile. Your support means the world to me. Thank you for being here with me. Thank you for giving me the opportunity to talk to you about being unshakable and telling you what the rich don't want you to know about fear and greed so that you can win even when the markets are down. I love you so much, and I'll talk to you on the next episode. Bye-bye. Feeling rich? I hope so. Thank you for joining me on this episode of Old Money. If you have questions you want answered, email me at oldmoneypodcast@gmail.com or hit us up on social. We are at Old Money Podcast, and I am at your service. If this episode spoke to you, inspired you, helped you, if you took a single note, it would mean the world to me if you could please just take a minute to rate and review the podcast. And if you're not doing so already, subscribe. And if you have friends who like getting rich, please share this episode with them, even if it's just on your Instagram story. And I'd love you more than Jeff Bezos loves Amazon Prime. Thank you so much, and I will talk to you on the next episode. Remember, I'm not your lawyer, I'm not your tax professional, and I'm not your financial advisor. The content presented in this podcast is intended to entertain, educate, inspire, and support listeners in their personal and professional development and does not constitute business, financial, or legal advice. In addition to that, this episode may contain paid endorsements and advertisements for products and services.